Morning students, today we will be starting with the first unit of security analysis and portfolio management, which is investment. Coming to the meaning of investment. Investment we can say as employment of our surplus funds in order to earn higher income. Okay, so what we need to understand here is in practical terms what does investment mean. Okay, does saving and investment is same or it is different? Okay, let us understand it with an example. Okay, say I have a monthly salary of 80,000. Okay, and my monthly expenditure of my family is say 50,000. So here in this situation I am left with an amount of 30,000, which I can do saving in my bank account or post office deposit account. This is saving. Okay, this saving, when I invest it somewhere like in mutual funds I say or the ventures I say, that is investment. So why saving and investment is different? Saving, it helps us to earn very low return in comparison to investment, because say let us take an example here, that I have 30,000 surplus amount, yes, and 30,000 I keep in my bank account, so it will give me a very less interest. Okay, I can earn very less interest on in that 30,000. Yes, it will not double, it will not double in 1 year also. Okay, but when I use the 30,000, I buy 10,000 shares, so 10,000 debentures and 10,000 mutual funds, okay, or bonds. That from the shares I will get dividend in a year. I will get debentures. In debentures I will get interest. In mutual funds I will get a very high return, because all I will get a high return in this investment. Why? Because this investment involves risk, very high risk in comparison to my saving deposits, the deposit which I did in my post office, and the post office or the fixed deposit, because and the interest rate is also very low there. Okay, saving mainly a person who is very conservative. He does not want to take any risk. He want to be safe always. He do not want to incur any loss. That person he mainly do saving. But saving does not help in multiplying our resources. Investment help in multiplying our resources. And we know a person, he have unlimited desires, as we have already studied in economics. I think in class 12 we have studied that a person have unlimited wants, right? And we have limited resources. Limited resources here means the 30,000, the monthly 30,000 which I can save, yes, which is my surplus money after incurring all the expenditures. And that 30,000, the 30,000, if I want to multiply, I will have to do investment. Okay, and investment involves higher risk and also higher return it will give me. So we say that higher the risk, higher the return. Okay, and these investment we can do in shares, debentures, bonds, and all. Also some investments, they possess liquidity. Okay, they possess liquidity. When we can say that they possess liquidity, like equity shares. Okay, equity shares of the companies which are listed on the stock exchange can easily be marketable. Yes, how we can market it? Through the stock exchange we can buy and sell, right? So we can say these investments also possess liquidity, right? And these are the characteristics, that higher risk, higher return, and liquidity. Also they have some liquidity. Okay, these are the characteristics of investments. While saving involves less risk, less return. What we can also take a practical, real life practical example, that making a difference between saving and investments. Like say I bought some mangoes from the market today, and I had it. Okay, I consumed it and I have thrown the seed. That is saving. Why is saving? Because I am getting a one-time benefit from here, that I'm I have bought the seeds. I have bought the mangoes, and I'm consuming it and throwing it away. But investment, how invest this mangoes can be turned into an investment here. Like, say I have bought the okay, I have bought the mangoes, I have consumed it, but instead of throwing the seed here, what I have done, I have planted the seed. When I plant the seed, after 10 years, this seed will grow into a very big tree, right? It will give fruits to me. That from that one mango, what I did, I have multiplied my resources, because that tree is giving me now a lot of mangoes. Those mangoes I can consume, or I can also sell it in the market. By selling it in the market, I will be getting what? Return. Yes. So how I have multiplied here. I have multiplied the mangoes. I have multiplied the resources here, right? So this is the difference between saving and investment, right? I hope it is clear. So here it is said that all savers are not investors. I think it is very clear, because saving we will have for doing investment we will have to have saving, but all saving we do not invest. Okay, all that's why it is said all savers are not investors. Mainly it happens with our older generations, our father and mother. They are very risk averse. They do not want to take risks. They do not want to take the risks of losing their money. Okay, that's why they keep the money in this post office deposits, or say bank account deposits, which gives a very minimal return. Yes, but as we are students of finance, we will have to understand. We will have to um, take this theoretical theoretical knowledge in our practical life, and we will have to use all this knowledge in investing. Yes, because only then we can multiply our resources, and we can enjoy our life, right? Okay, fine. Then, so saving, we mainly savings we can do through fixed deposits, time deposits, post office deposits, etc., and also government bonds. Okay, but in case of investment, we mainly do through shares, debentures, etc. Now, coming to the difference between financial investment and physical investment. Financial investment help us to generate financial assets, while physical investment help us to generate physical assets. Like, say financial investment, we will be saying that it is generating financial assets if through interest. If from an investment we are incurring interest, or premium we are earning, or we are earning dividend, that is financial investment. Okay, and physical investment, we will say, if say we are buying purchasing a plant and machinery, or a real estate, or investing in real estate, all this will be in physical investment. Okay, however, these two investments are related and dependent. Why? Because the money invested in the through financial investments are ultimately converted into physical assets. Okay, so all investments results in the acquisition of some assets, either financial it will be, or either it will be physical. Okay, I hope you all have understood it. Okay, now coming to the difference between investment and speculation, we know that a person who does investment is known as investor, while a person who does speculation is known as speculator. And while a person who does arbitrage is known as arbitrator. We will be covering it in another video, what is arbitrage, who's arbitrator, and all. Okay, now coming to the difference between these two, investment and speculation. Investment, mainly we do it with a long term profit earning motive, while speculation we do it for a short term profit earning motive. And in short term we try to earn more. Okay, that is the aim of a speculating. Okay, that's why it is short term in nature. So what is the main difference between investment and speculation? Investment, when we do, say we have buy the shares or debentures, we first try to analyze the company's performance. We do performance analysis of the company. Then we see whether how much dividend it will be paying to us. in a year or in 3 years how much dividend we will be able to earn. um, while if we invest in debentures, we will try to see what is the interest rate the company is providing us, what is the performance of the company uh, in say 5 years. Then we will try to invest in the company which will provide us more interest or more dividend we will be earning. Right? So here the focus is on the long term profit, while in speculation we it does not matter whether how much dividend the company will be paying in the shares or how much interest it will be paying in the debenture. The only concern here of a speculator is to see the price changes. He tries to make the profit from the price changes. Say today we have buy a share of say 50 rupees, and uh, say in the day trading, you have heard about the term day trading. What the speculators do, they buy it at a higher less price and try to sell it at a higher price. So today I have buy the shares of it at 50 rupees, but as the market keep on fluctuating, the prices keep on fluctuating, right? So when it will become 55, I will sell it at 55 rupees, and the difference, that is 50 in I have buy at 50 and sold at 55, so the difference 5 rupees will be my profit. So this way a speculator try to make profit in the short term. Yes. So but in speculation there is higher risk, that's why, because if the share price, even if today it is 50, tomorrow it might go down to 40, so he may incur a huge loss also. He may incur huge loss or huge profit. That's why there is higher risk in speculation in comparison to investment. Okay, because investment we are doing for a long purpose. Even if the market price, the prices of the shares decrease today, it might go up in the next year. So investment is less risky in comparison to speculation. In investment we earn a steady income, okay, but in speculation we earn huge income. When we earn income we earn huge, but when we make loss we might have to incur a huge loss. Okay, now coming investment, mainly we do it from surplus fund we have. I have already explained it, right? So and speculation we try to do speculate with borrowed fund mainly. Okay, while investors in investment, when you do investment, the investment investors are very cautious and conservative because they will be investing for a long term purpose, and so some income is definite that they will be earning some income. But in speculation, the speculator is very daring. He want to take risk. He is very aggressive to earn income. He cannot wait that for a 1 year period or a 2 year period. He cannot wait. He is very aggressive to earn profit. Right. I hope you have this clear for you. Thank you.